I think we are starting to get a clearer and clearer picture about what President Trump calls a national housing emergency. We are also starting to see how far he will go to get us out of this emergency. What am I talking about? Well, first and foremost, we have the idea of a 50-year mortgage. We will also now have the idea of no income tax. Yes, folks, the possibility of having no federal income tax. What does that mean to the bottom line? Well, for lots of people, it means a bigger number. We already have the big, beautiful bill which says no tax on tips, no tax on Social Security, and we also have some bonus depreciation. Lots of things coming in this national housing emergency. We're going to have a conversation with Jonathan Twomley and say, what does this mean for real estate investors? What does it mean for the market? Jonathan, we have a president who is a real estate guy, and he is saying national emergency. So we're starting to get a clearer picture on what he's willing to do. What do you think?
Well, I mean, listen, we have to take this all with a grain of salt because very likely none of this will ever happen. But we can sort of play out the fantasy of what would happen if we had the combination of no income taxes, 50-year mortgages, and lower interest rates.
You're saying that you would say that might be a recipe for some shocking things.
That would be a recipe for the greatest boom in real estate prices probably ever.
Oh, for sure. Yeah.
And leaving everybody behind who doesn't get in like right away. So it's the kind of thing, just as we talked about a few weeks ago when we talked about the 50-year mortgage, really great for the people who jump in right away and get in on it. Kind of sucks for everyone who doesn't, because all it's going to do is cause massive inflation in real estate. I mean, I can't even imagine the inflationary effect of eliminating income taxes like in one fell swoop. It would just, I mean, we had a couple of years ago when inflation reached like 8 or 9%, misusing the label of hyperinflation.
Sure.
We would get, I think, at least double-digit inflation.
Wow.
If not more, if suddenly everybody got basically, a 35 to 50%.
Well, let's poke at that a little bit. Yeah. Let's poke at that a little bit, because again, on the surface, I think on the surface, the average American thinks everyone pays federal income tax, and the reality is something like 40 or 50% of the bottom pays zero.
It's true.
Right. So folks, for half the country, congratulations. You already have no federal income tax. So you would see no benefit. It's the top 50%. It's once again the K-shaped economy. This one probably a little more extreme because you're probably swooping 40 or 50% versus just the top 10. But that's the portion of the country that's likely shopping or owns real estate already, right? The top 50%. The bottom probably is renters, just given debt to income and things of that nature. But yeah, that would be more disposable income, and anything you could do to increase disposable income, meaning money can be spent. Asset prices of all types would rocket higher.
Asset prices would just would explode if everybody. So anyway, the upper 50% got a sudden salary increase,
windfall,
of between 10 and call it 40%. Right. They would suddenly have all this money that would then go into assets, vacations, luxury goods, and it would still create higher inflation, and it would, people will say, well, it would, they'd go and buy like, $2-3 million houses, but everything else would be left alone. But that's not true. Like that, it would have the effect of, once they ran out of $2 million houses to buy, then they'd be going overbidding the 1 million house, and then it just trickles down. So it would pull all the house prices up for along the board. So it would, if you own a house, it would be great. But if you're trying to buy a house and you don't get in early, not so great. And especially if you just if you have the combination of all those factors, like let's say you have a Fed chair who, is like, I don't care what the data says. My president wants lower rates, so I'm lowering rates.
Yep.
If you have that combination of factors, because the inflation would cause rates to rise, but if you had a Fed chair who was like, damn the data, of course they can't control they can't control the long end of the curve, but it would be. I don't think it's one of those things that sounds great, like, yay, no income taxes, but unless it was like phased in over a very long time or something that to try to dampen down the inflationary effect of it, I think it would be, they have a lot of unintended consequences that I think people are not prepared for.
I think this is exactly where I wanted this conversation to go. And again, I do think President Trump is focused on housing, is focused on affordability, but unfortunately, and this is true of all presidents, because again, they run in 4-year cycles and their jobs to get reelected. The real answer is, once again, we're learning more supply. You want to know why apartment rents are falling? Because we built a shit ton of apartments, right? They're all coming online at the same time. So rents are down in apartments, if you believe realtor.com, 1%. That's for the country. And they're down 5% from the peak. Again, supply is the difference.
Yeah, I mean, actually, but now we're seeing demand side too. We are seeing demand side declines in addition to
record vacancy at like 7% or something.
Yeah. And and I was just reading yesterday that absorption suddenly has fallen. So and that is really what we're seeing, the impact of inflation, tariffs, all those other things that people are holding off on making big decisions like moving out into their own apartment and things like that. So we're actually, absorption had been heading in the right direction in most places until just the last quarter. And suddenly the data is now showing that there's, it's a double whammy, not just the supply side shock. Now there's starting to be softening demand as well. So this is getting a little squirrely for a lot of markets, I think.
Yeah, just more pain for syndicators. That's all I'm hearing you say, is the opportunities will get bigger because, again, syndicators overpaid and opportunities are coming.
Yeah, I mean, listen, we've been beating this horse for a long time. This kind of, I'm going to mix a whole bunch of different metaphors here all at once, but we have like this shadow inventory of unforeclosed assets that need to be foreclosed, like moving like the mouse through the snake, right? And at this point, I think the snake has got like, its jaws around the mouse and hasn't even started digesting the mouse yet. And we see it on the horizon, like we know what's coming, but it ain't here yet. And all of this drumbeat, softening demand, first all the syndicators who are overpaid were like, oh, well, lower interest rates will save us. Well, we got lower interest rates, didn't save anybody. Then they were saying, yeah, absorption, construction, the pipeline is ending. And then, well, a lot of the kind of stalled stuff, they started up again. The minute that it looked like supply was starting to dwindle, all of the stalled projects started up again. So we had an increase in supply, and when they say like supply is slowing down, well, yeah, their new supply is slowing down, but there's still 500,000 new units coming online, down from 700,000. But it doesn't mean that like, oh, supply has dried up. Like this pipeline has to be completed.
It's got more time. Yeah.
And then when you hear about the demand side softening, I mean, there's a lot of people who are sort of hanging on for dear life, and this will be the final nail in the coffin, because
that's exactly where I'm going with this. Because again, I think there's and again, I saw this in the last crisis, right? People hold on, they always think there's going to be some magic bullet to save them, but at some point the spirit breaks and they just give up. And this could be the next one that just like, okay, I'm done. I just forget it. I can't save this thing.
And also what really matters is how the lenders are feeling, right? Not how because the operators all are struggling to keep it going. They're fighting to figure out a way to save the property, not get foreclosed on. They're not really throwing in the towel, or they'll be the last to throw in the towel, but it's the lenders who are like, you know what, enough is enough. We want we want to get back what money we can. We're tired of these things not performing, and like we just want to cut our losses and move on with our lives. When this is the kind of thing that could spark the lenders to start feeling like, you know what, enough is enough, because we're not seeing the light at the end of the tunnel, or it's just too far away. We're already into extensions on these loans, and we're just not giving any more extensions because the true recovery is, a few years out. So I think you're going to see the foreclosures start to tick up. And then for, all of us who've been on the sidelines for a while, that just means more opportunity. And
it's coming.
It's coming. So, I know there are people out there who will continue to say the crash hasn't happened. You've been talking about this crash for a long time. It hasn't happened yet. Therefore it's not going to happen, or the bottom is in, or whatever. But I mean, listen, this enormous shadow inventory is only just starting to show up. I saw a post on LinkedIn today, actually, where the lender had posted, we've just foreclosed on, it was actually a Tides property. Remember them?
No, I do. Yeah.
Yeah. And, and they were like, it's occupancy in the high 80s. The previous owner didn't put any CapEx in, we're taking care of some deferred maintenance and we're putting it on the market. And they're putting it on the market. They say they expect it to trade at like 105, 110 a door. I'm sure the original price of this was probably, at least 150, probably higher. Probably 180. Right.
Yeah.
So, this is when you start seeing posts like that on LinkedIn, like, hey, we're selling this thing and we're willing to finance it too. Is the other thing they said, like, we'll finance the purchase. Right.
Wow.
So,
that's when that's exactly the units we bought in the last crisis. They were bank financed because they were at such a distressed, situation, occupancy, deferred maintenance, that they were the only game in town. They had to finance it.
Yeah.
But let's get back to the topic at hand. President Trump, national housing emergency. Again, folks, when you think about what that means, it's hard to go after supply. It's not sexy. It takes time, but you can go after demand really easy. How do you do that? You increase disposable income. What's the biggest lever? Taxes. Let's get rid of the IRS. Next, you can get duration. You can go from 30 years to 50 years, lower the payment. Again, more demand. And then, oh, by the way, you have Kevin Hassett looks to be the nominee, who is in ultra dove, possibly to the point of restarting QE, buying mortgage-backed securities. Hello, you want lower rates? Make the Fed buy mortgage-backed securities. And that's a triple whammy. That's a let's go, explosion, right?
Yeah. I mean, it'll juice demand. And the problem is that's not really what we need right now.
Correct.
For homes, right? We need more supply. And it's funny, this came up. So I saw yesterday, there was an article about like yet another group of landlords in New York City trying to challenge the constitutionality of rent control, right? I mean, they've tried and they've tried and they've tried. And the Supreme Court has, consistently said, this is an economic regulation and it's a state thing and we don't have any business doing it, right? Mm-hmm. It's not a taking. But these guys are like, hey, given the composition of the court now, we think we have a shot. And the thing is, okay, yeah, everybody agrees, I think, that is sane that rent control doesn't work. But it's not going to solve the housing problem in New York City, because the problem in New York City is a demand problem, right? Is a supply problem. And if we built enough in New York City, actually, I don't even think the rent control would really matter that much, because the market rents would fall anyway, right? I mean,
just would self-adjust.
It wouldn't be such an issue. And,
agreed.
There are definitely issues. There are other issues with the rent control, like the problem with, the caps on how much you can recapture when you renovate an apartment, which makes it unviable to renovate apartments. That's a whole different problem.
Yeah. I don't know if you know this, but I've read articles that talks about possibly 50, maybe even 60,000 vacant units.
Yeah. I mean, that number nobody really knows what that number is. This lawsuit says 28,000 units.
Oh, all right.
So, but it's a lot, it's a lot of units that are offline.
Even if it's only 28,000, that's hundreds, if not thousands of buildings.
Yeah. And clearly this needs to be addressed, but like it's only half of the problem. The other half is the supply problem, right? And they just need to make it easier to build. And that's the problem everywhere. And that's something that, that the federal government doesn't have a lot of ability to affect this, because it's all local stuff. It's all, zoning is within the power of the states. I mean, that's been decided for a long time. Yeah. And this is, and zoning, the constitutionality of zoning was challenged back in the 60s and 70s. And the court said, like, this is, I seriously doubt that they're going to go after zoning. So that's the issue. Like, local governments have to grasp the nettle and just, tell the NIMBYs to, shut the hell up and just expand supply. But that's
build, baby, build. Drill.
Yeah, it's true. I mean, that's what we need, but it is tough. I mean, you see, even, like Massachusetts has done a lot to try to increase the supply of housing through legislation, but it's still, and with things like they're really like penalizing towns that don't rezone, and you still see all this resistance on the town level. Like, people are like, the hell with it. We'll deal with the penalty. We don't want any more housing near us. And this is a really thorny issue. I mean, this is going to have to be dealt with, like some state is going to have to take the lead and say, and states can do this, by the way, because municipalities are instrumentalities of the state. So essentially they have no like independent existence of the states, unlike the states versus the federal government. So a state could come and say, we're taking over zoning. Like, the state is going to take over zoning. Now, there'd be like probably every legislator would get booted out of office if that happened, but they could do it. And I think some state is going to have to say, we're taking this back. We're not allowing municipalities to control zoning anymore. This is a state decision. And, that's really the only way it's going to happen. Right.
I couldn't agree more. Again, you can use carrots and sticks. Again, maybe the federal government gives money away for people that do that, or our cities or locales to do that. But again, when we think about, this notion of a national housing emergency that's been referenced really for the last couple of months in the Trump administration, we've talked about a lot of demand side, but, do you see anything else possibly coming? Because I do think they're going to make moves. I think, the midterm elections, let's not forget, midterm elections are 11 months away. Affordability is clearly on the agenda. The election of the socialist mayor in New York is a great example of somebody who ran on the message of affordability and crushed it. He did a great job and won. I think the Republicans need to wake up and realize it's affordability is still a problem. So, do you think we see anything?
Well, I don't know. I mean, with Trump saying that the affordability issue is a Democratic scam, I'm not sure. Maybe he'll change his tune because he's good at sort of changing his tune a lot. But if that's the message coming out of the GOP,
he's going to have a problem. If the GOP doesn't realize that affordability is still seemingly the number one issue in most of the country, the midterms will be a bloodbath, and then Trump will be a lame duck president for a couple of years.
Well, if he doesn't get impeached like on day one. So,
there's already been two, so I'm not worried about, at the end of the day, I don't think we can sleep on the midterms, right? I do think that President Trump will do everything he can to maintain the House and the Senate. And that means we're going to get some demand side goosing, I think.
Yeah, otherwise known as bribes to the electorate. So
both sides do it. Both sides do it. Yeah, it's not one-sided equation.
No, giving away free stuff is
and promising free stuff like free buses and grocery stores. Yes.
This does not know partisan.
This goes back to high school, man. Remember high school? No, vending machines are free and recess is double or whatever they call it.
Yeah, giving away free stuff.
No homework
is a bipartisan.
It's a politician trick. Yeah,
yes, exactly.
Well, at the end of the day, I do think we're going to see probably in the next 6 to 8 weeks. I think we're going to see some meat on the bone I think as we kind of discussed on the video, I think this is going to be heavily skewed towards demand, not supply. Because again, supply is not fast and not sexy, but demand is fast and sexy. So 2026 is going to get interesting, I think. What do you think, Jonathan?
Yes, I agree. It is going to get interesting. So it's like, the Chinese curse, may you live in interesting times. I think that that's what we're in for in the next year.
Yeah. There you go. We're going to be here for it, folks. Again, Jonathan and I talk weekly. Jonathan, you have an amazing school community that's growing. Why don't you tell us what it is?
Yeah, it's school.com/AIC, which stands for Apartment Investors Club. And a lot of ORAT people have joined so far. So if you would love to talk with me in person, please join. And one thing that I like to do is I actually like to get on the phone with every single new member who comes in. We do a 22-minute call just to say hello, learn a bit about you, and I try to solve a problem you've got right then and there.
There you go. There, it's on the screen now, folks. School.com/AIC. Again, Jonathan's been with us for several years, so check out the playlist, see what's going on. Jonathan, you're amazing. We'll talk next week.
Thanks. See you then.